GM, GM, trade of the day. I want to look at what I think probably the main source of uh, bearish structure and demand is here, and it's on the future side. So spot is not strong at the moment, as you can see by the ETFs. Right, we don't have strong ETF flows, so we don't have a strong spot market. There's a predominantly futures-led market here, or more so, what I see is just neutral. Right, you've got this spot premium that's back. I've talked about it a million times. The spot premium is bullish when it goes up. When it's not going up, it's neutral bearish. Doesn't mean anything, really. So we've had this spot premium all the way from over here, but price is not making higher highs. It's just formed a range, right? It set a high on the bounce, spot premium. Come back and retested it, spot premium. It's now declining down into the lows, spot premium. A spot premium, what's the idea? The idea is the spot market's leading. Well, if the spot market's leading and price is going up, that's really bullish. That's a spot-led rally, which we saw back over here. Big difference. It's literally just rising. Once it reaches bottom, it was a low, then a high, then a higher low, then a higher high, then a higher low. Higher high, higher low, compressing, rallying up. Spot premium continued all the way until we hit 48K. This is not that. We had our little rally here, but quite clear this is a short squeeze. It's not a strong move. It's more of just a impulse lower, then chop people up and grind them into the highs to squeeze them out. And then once the short squeeze is done, you see, no demand. Drops off. We fall back below 64, which is my level. For me, very, very, very simple. Be bullish above 64. But below that, be cautious. And I think what's going to unwind and drive a lot of this is the CME futures. So the CME futures open interest has been building up for months. This used to be a very, very small percentage. This used to be like the fourth biggest Bitcoin futures market. Whereas now, it's by far and away the biggest. It's not even close. You remember me talking about this a lot over the last few months, or especially back in November, December, as we were going towards the ETF. Because the CME is a regulated futures exchange open to US investors. So predominantly, Wall Street will do their futures trading for Bitcoin through the CME. So it's different to Binance, Bybit, BitGet, and all those. And last year, Binance and Bybit would have about 4 billion and 3 billion of open interest between them, or each. And then slowly, CME started to creep up. CME would always be equivalent to Bybit, I remember. If Bybit was 3 billion, CME would be around that. And then CME just ramped up. And this has all happened in the last 6 months. Just ramped up. First of all, caught Binance. I remember that. It was a huge, big event. It was a big thing. The biggest futures market for Bitcoin is now no longer Binance. That has not been the case for years. And went to 4 billion. Then went to 5. Then went to 6. And of course, the whole market started rising. So did Binance and Bybit's open interest. But CME just fucking outstripped them all. Went all the way up as high as, at the peak, 11, almost 12 billion, 11.5 billion. So way outstripping Binance. And now that's unwinding. So that was a trade predominantly driven by the ETFs. So from October, you can see it rise up from a low of 2 billion all the way up to 6.3 billion right at the ETFs, right? So the day of the ETFs. Then you had that a little washout as some of the ETF traders took profit. But then we started rallying again. And while this was a predominantly spot-led ETF-driven rally, you can't deny there's a lot of futures, short-term money, chasing it too. Because look at how the CME, if this was just a purely spot-led rally, why did CME futures go from 4 to almost 12? Why did they almost triple on that move up? Because people got long They long their longs. They opened longs on top of their spot, or maybe they didn't even have a spot. And why does this matter? Well, if it is like people would have you believe that the ETFs are just this massive only bullish thing and it's all just super strong spot demand, you wouldn't see so much activity on the futures. The fact there's so much activity on the futures means, yes, there's spot demand, but also people are getting long with leverage to try and amplify their gains on top. And all of that is based on the ETF flows remaining strong. This whole Wall Street trade is front-running bullish flows. Absolutely. So now we don't have bullish flows. And what you want to look at is the concept of divergence. So look at the CME futures open interest. So since the top, it's made a low, then a lower high, then a lower low, then a lower high, then a big lower low on that flush down, then a lower high, and we're almost already making new lows. In fact, we are 8.81, 8.77, right, from April the 17th to April the 26th. Why does that matter? Because look at Bitcoin's price. Bitcoin's price has not made lower lows. So what's keeping the market up? Because the CME guys are distributing. They're closing out their positions. Now that's fine if the market can absorb it, and hopefully it can. But if you're looking at just the build-up, just since the post-ETF lows, 4 billion, it's still double, right? So it's 4.2, it's now 8.7. You still have a build-up of over 4 billion of what is probably fast money, so short-term positions. These are not people. And again, if it's post-ETF, these are not long-term holders of Bitcoin. That's important to remember. It's also not all longs. Open interest, remember, is a long and a short. But safe to say, the vast majority of shorts got squeezed out on this move. You can't go from 39 to 74 in like a month, right? A month and a half, without squeezing out the vast majority of shorts. Shorts will absolutely have given up and capitulated. So it's not spot. It's not long-term bullish buyers. Because, and this is the point, after the ETF's launched, they can now buy the ETF. So anyone who's longing this has chosen not to buy the ETFs, not to buy spot, right? Not to buy the underlying. They've chosen to get long with leverage. And we're only looking at longs here because price is now declining. And open interest decreasing is a sign of distribution. Why? Because positions are closing. Open interest only goes down when positions close. A market like crypto, which is so attention-based, cannot stay up if people are exiting. Right? If people are closing their positions, whether it's a long taking profit or a short taking profit, or both, it doesn't matter. If OI drops, less people are in the market, by definition. If less people are in the market, that's less demand. If there's less demand, price will drift lower until it reaches a level where people want to open positions again. So I see this as being something that's not really talked about. Probably potentially several more billion of CME futures positioning that needs to unwind. And that's not including the Binance, the Bybit, the OKX, the crypto native stuff. And so what can save this? Right? Because we're in a period of the market where liquidity in general is lower, right? We've seen this with the tax receipts in the US and blah, blah, blah. I think the most bullish thing that can happen for Bitcoin is not that it moons. I think mooning from here is unrealistic because there's no demand. And there won't be demand for probably a few weeks. Until at least there has to be some new wave of ETF buying that comes. But obviously we can see from the ETF data that so far they're tapped out. And I think what needs to come next is a consolidation phase, obviously. And just for Bitcoin to not break down. The longer Bitcoin doesn't break down, the more bullish it becomes. Because the longer it goes without breaking down, that tells you that even though people are exiting their positions, somebody's supporting the market. And we know that there's probably some positive catalyst just around the corner. It's a bull market after all, and Bitcoin doesn't need much to get bullish again. But it does need real flows. So if you see money starting to flow back into the ETFs, that's good. These Hong Kong ETFs people are talking about, I'm on the fence with this. I was talking about it weeks ago, like originally thought this would be quite a bullish thing. But from doing some more digging, It's only bullish if Chinese investors can invest. Because outside of that, there's not a lot of capital. Chinese rich whales need to be able to invest in these ETFs. And so far, what I've heard and seen is that they can't, at least not easily at the beginning. So, so that's like opening ETFs in America, but then saying, oh, it's only open in North America and it's only open to Canada, right? It's not open to residents of the United States. That's where all the money is. In Asia, all the capital is in China. Hong Kong itself is not going to have much capital in it. And any international capital that's there, they can already access it through other means. So maybe that can save the market briefly. Maybe there'll be a bunch of demand coming in on, I think it's on the 30th, which is tomorrow, when they start trading. Possibly. We'll see. But the jury's out for me with that one. So I'm watching this closely. I think a lot of this is just positions need to close as people realize, oh, okay, so it's over. Like the uptrend is done. And this doesn't mean you dump your spot, but if somebody's balls long spot bought a bunch of ETF and then got long on the way up, the longs have to close. You can't just stay fully spot long and fully leverage long, right? So bullish people are going to go back to spot and close their leverage. And that's where you're seeing this drop off. And that drop off can often lead to weakness in the price of Bitcoin. And we'll see where it goes from there. So, much the same as I've been saying, it's sort of still just this chop, 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 not expecting a huge amount of movement. Anything, above 60 and below 64 is meaningless, right? It has to break at least 64 for Bitcoin. And if 60 doesn't break, again, if 60 doesn't break, it can chop around there for fucking 3 weeks. If 60 doesn't break, the longer it doesn't break, it's bullish. If 64 doesn't get reclaimed, it's not bullish.